This week will try and steal your money, and most will let it happen. The Fed is about to cut rates, and the entire market is split between euphoric and panicked. 1 minute Twitter is screaming, 150k Bitcoin now! The next, headlines are flashing, 75k is imminent. Nobody knows what the hell is going to happen, and in that chaos, that's where the 97% gets slaughtered. But not you. Not this time. Today, I'm breaking down the exact mindset the 3% use to dominate markets like these. If that sounds good to you, do me a favor, smash that like button, hit subscribe, and let's get into it. This video is for informational purposes only. Crypto assets are high risk and are not suitable for all retail investors. This video is not intended for a UK audience. Right now, crypto is a war zone. On one side, you've got the laser-eyed permabulls screaming that this rate cut is the final rocket fuel for Bitcoin to hit 150k by Friday. On the other side, you have bears screaming rate cuts are always a sell the news event and it's all over. What's the truth? That truth is, it's all a trap. And retail traders are caught in it, bouncing between euphoria and terror like a pinball. They're reacting emotionally. They're not thinking rationally. And that's exactly what the market wants, because an emotional trader is a broke trader. Everyone wants certainty right now. They're desperately searching for someone to tell them this means pump or this means crash. Let me give you some real talk. Anyone telling you they know what's going to happen this week is a liar. Period. Let's look at the actual data, not the hopium. What happens to the market after the Fed cuts rates? The reality is, it's a coin flip. Don't believe me? Well, I have the proof, and it's undeniable. This table shows how SPX reacted to every rate cut since 2001. Why SPX? Because crypto is deeply correlated to the stock market, and this gives us decades of data to look back on. Since 2001, there has been 32 rate cuts in the US. How did SPX react to the cuts? It closed green 14 times and red 18 times. That's as good as 50-50. Sometimes the cut triggers a relief rally. Sometimes it's a sell the news dump. Back in September 2024, the market pumped hard after rate cuts and Bitcoin made new all-time highs. But does it mean it will happen again? Absolutely not. And this is not financial advice. The market could go either way. The point is, the short-term reaction is pure, unfiltered noise. It's a gamble. The long-term impact is what matters. And for that, you need to understand what rate cuts actually mean. So listen closely to this part. It's important. Rate cuts make borrowing money cheaper. This increases the availability of money, which, historically speaking, often boosts demand for financial assets. In other words, makes them pump. Again, this is not financial advice. I am talking about historical patterns. But there's a catch. There's always a catch. Big rate cuts can cause panic in the market short term, because big rate cuts sometimes mean something is broken. So seeing a short-term dump is not uncommon. Like I said, historically, it's roughly 50-50. So what's the bottom line? Long-term, increased liquidity is historically bullish for risk assets like crypto. Short-term, this week's reaction is a coin toss. Trying to trade is a complete gamble. So if the rate cut itself is a coin flip, where's the real danger? It's not the Fed. It's not the charts. It's not the news. The danger is market manipulators and how they mess with your mind. This is where 97% of traders lose. They make one of two fatal mistakes. They FOMO buy the first green spike, aping in at the absolute top of the fake out right before the whales dump on their heads. Or they fall for the sell the news narrative, getting scared out of strong, high conviction positions that are set to run for the rest of the cycle. Panic, FOMO, fear. This is how the game is played. The market creates maximum confusion to trigger your emotional weakness. And when you act on emotion, you become exit liquidity.